Hi, welcome to the Market Alert for Wednesday, the 14th of June 2023. So yesterday, US CPI tumbles to two-year low, but good prices re-accelerate. Inflation outpaces wages for 26th straight month. So good news and bad news there. The market moved up on that information, and the broader market, dollar dives as Yellen questions reserve currency, bonds and bullion battered after mixed CPI. So silver had a double whammy. The dollar was battered because Yellen raises questions about the reserve currency, and the CPI numbers coming out better than forecast as well. So yields saw to post Silicon Valley Bank highs amid pre-Fed positioning after inline core CPI. So the core was in line with what the forecast was, which is why the markets continue to move higher. And US stocks gained and yields climbed as market digested US CPI data ahead of the FOMC, which we have this evening. And it's like I said yesterday, it looks like rates are set to remain unchanged. And if it does, then the market's going to blast to the upside on that one initially. And then it may see something different because it might think, well, hang on a minute. Yesterday we saw in the news that there was a re-acceleration of inflation, and maybe we should actually have increased. So who knows? UK today we've got GDP month on month. That's out this morning. That's to show a positive for the first time for a long time. We've got core CPI, PPI, and they're out at 130. They'll be an interesting ones to see as well. At the moment, it looks like not a non-event, but we'll have to wait and see at 130. Okay, let's move on. Take a look at the Dow, work our way through to the metals and see how the markets reacted to yesterday's better than forecast CPI numbers. And in the Dow yesterday, you can see the market trading up to that 34,261 that I drew in yesterday. Went through this and came back overnight. The market's still moving higher. We're nowhere near the 5-bar moving averages at the moment, which means that the market is extremely strong on the upside. In the 30-minute chart, the Dow was quiet until the CPI numbers shot down to the DP, spiked down in an instant, and then moved up for the remainder of the session there. You can see that high that we saw in the daily being taken out there, that 34,261, which would be around this area here. So, and then we had a retracement there, and the market has backed down a bit, just below the DP at the moment, but it'll be gunning for the high of yesterday with those FOMC meeting minutes later this evening. In the German DAX, trading up to the 89 yesterday, 16,225. Well, not quite there actually. The high yesterday was, let's just have a look, 16,246, but that's the target today. To sail through the 16,255 back to the all-time high of 16,333 is where the market is likely to head. Again, we're back through the 5-bar moving average. Prices are nowhere near that at the moment, showing some significant strength. Yesterday we had a markdown before the CPI numbers, and I wouldn't be surprised if we don't see that this morning for the DAX. Again, like the Dow, off the DP, and then it was just a one-way bet. We didn't quite make the that 16,255, which is drawn in there. It was at the R2. It's now going to be at the R1 today. But at the moment, the market above the DP and sitting sideways there above the 50 EMA as well. Things may change when the market opens in the futures shortly. But futures market yesterday sideways. Then we opened on the cash. We shot up, and then eventually we just made our way down. Market drifting down over 100 points, and then waiting for the news, which it got. You can see that there, down to the DP, and then off we went to the upside. And you can see how the market just held all the way through, down a bit overnight. Watch the DP if the market comes back, but also watch the high and the close as we go through the day as well. Let's just have a look, see where the low is for yesterday, just in case we do get a bit of a sell-off before the FOMC meeting minutes, because the market may have already factored this in. So there's the low down at 16,086. And if we go below that, watch the 16,000 level, because we've managed to get above that and stay above it recently. In the S&P 500, continuing to move higher. Best thing to do is to look at the monthly chart. You can see we're heading back to the all-time highs, 4817.5. That's where we're going. The next upside target is 78 at 4525.4. In the 30-minute charts of this yesterday, again, market just drifting sideways at the high of Tuesday, finding support of Monday actually, and then you can see spiking down and up and then continuing, but at the moment nowhere near yesterday's high. Got to stay above the DP, which also sees a bit of support with the 50 EMA. UK FTSE up yesterday, stuck in a sideways range, still above the 200 MA at the moment. And there you can see the reaction coming off the low yesterday, having drifted lower, straight up to Monday's high. It's only Wednesday, isn't it? Up to Monday's high, and then sideways to lower there, and just trying to stay above the DP, but struggling a bit there. In the currencies, well, the action of the GBP JPY straight up yesterday. Following the news, and then you can see that there, straight up, no messing. But we'd also moved up in the start of the session as well, and you can see there was resistance at the R1, but this was just blown away, and the high of Monday as soon as the CPI numbers were released. The dollar weakness obviously continuing with Yellen's comments, saw the pound move higher. We've traded through the 78 now, we just need to hold it. And in the 30-minute chart, you can see that move to the upside. There, and is the news of the CPI numbers yesterday. We're still above the DP and the 50 EMA, but we're struggling a bit with the close, and we need to take out yesterday's high in the pound. In the dollar index, you can see yesterday we were down, but starting to regain overnight, so I wouldn't be at all surprised there. I don't know what the actual comments were by Yellen, but obviously it had an adverse reaction to the dollar yesterday, sending it lower and supporting all of the currencies. And in the metals, as I said yesterday, monkey hammered indeed for the silver price down to 62.78 area yesterday. 30-minute chart, you can see that was fine until we had that news, and then just absolutely slaughtered. No surprise, they're going to keep doing this until they don't need to. Close and low are going to be the downside targets today for the metals, and also gold, as you can see yesterday, hammered, so they can keep buying it cheaper. As you can be seen there, the market's reaction, it really does want to go up, but it keeps getting pushed back, and also you'll see that we've managed to move back towards the DP on the overnight there. And finally, gold silver ratio. Silver, you can see they got monkey hammered yesterday because it's green. If it's green, it means that silver is weaker than gold in percentage terms, and overnight it's gained a little, and gold has been sideways there. Okay, that will do it for this one. If there is anything else to report, I will let you know, but don't forget 7 PM is the big one. The market has got the news at 1:30 as well, but watch those highs as the market continues to move higher, and there's a fear now of missing out on the up move. You can feel there's a sort of a ground swell of it. So yeah, as we go into the summer, it's going to be easy to do as well, because traders leave the desk and leave the market free to continue to move to the upside, unless there is something that comes out of nowhere that sends the market down. But let's face it, they've raised the debt ceiling, they printed 4 trillion. There's not really a lot that could go wrong at this point, and they keep covering it up anyway. So anyway, let's see what happens with the more prosaic rate increase, decrease, or left alone at 7 PM this evening. Okay, thanks for watching. See you in the next one.